Hi there, welcome to Kneppy Invest, and it's time for another technical update video. And this particular technical update video will be no different from other ones. I'll have a look at some of the indices. In fact, the XGO is up right now, and it is looking interesting, looking quite nice. And then we'll have a look at commodities, Bitcoin, bonds, and then I'll bring you about 15 companies that are listed on the ASX. And these companies include Kelsian, IPH Group, which I actually did mention in my answer and replies video that I released on April the 6th. So I'm going back to that. Image Resources, Nickel Industries, Orora, Gentrack, Iperionx, which I don't hear much chatter about. Yeah, the chart looks absolutely amazing right now. Weebit Nano, Hazer, Light and Wonder, AMI. What's AMI? Aurelia Metals. I could be completely mistaken there. Silver Lake Resources, WH Soul Pattinson, Treasury Wines, and then I'll finish with Karoon. But before we have a look at those particular companies' charts, and they're all looking interesting for various reasons, some of those reasons are not good reasons. Well, that's not absolutely true. They're all looking interesting for various reasons. Whether it's good or bad, I leave that up to you. So let's go back to the indexes or indices. Still don't know which ones are preferred. I think they're both good, but they're both not perfect, but they're both not apt. What's a good word? They're both acceptable. That's the word I was looking for. Indices and indexes, they're both acceptable. I didn't do any research on this to find out if they're acceptable or not, but someone did mention that indices is acceptable in the United States and indexes is British, but I need confirmation on that. And I think both are acceptable. So I will use indices, depending on my mood at the time. Anyway, going a bit of a tangent here. Let's have a look at the XGO. The XGO looks pretty good, still looks pretty good, although the week was a down week, but it's still in an uptrend. And the reason I say it's an uptrend is because, say you just draw a line like this, so that's connecting all the lows, and then you draw a line like this, which is sort of connecting all the highs. So not completely, it's not perfect, but we keep seeing higher highs and higher lows, and that's the definition of an uptrend. So the XGO is in an uptrend, even though we had a down week, and it was a down week. Actually, I'm going to get rid of those lines because I don't want too many lines on a chart. I like simplicity. I'm a simple person, and I like simplicity. I think some people overcomplicate things in their life, and I actually believe there are some chartists who significantly not oversimplify, but what's the opposite of overcomplicate the charts? I see some charts who go, why? Just make it as simple as possible, and then you make it much easier. Anyway, so this is, no, it's not. I was just about to lie. This is the weekly chart, and we did have a down week. So the XGO was down 1.57%, but that means really nothing because on occasion we have down weeks, and it happens quite often. In fact, just look at the colors here. So green candlesticks are up weeks, red candlesticks are down weeks. It happens every few weeks. In fact, we had a down week this week. 3 weeks ago, we had a down week. Before that, it was 3 weeks before that, and then 2 weeks before that, and then 3 weeks before that, and 2 weeks before that. So it seems like we have a couple of good weeks, then a bad week. A couple of good weeks, then a bad week. And then you don't want a few bad weeks sort of combined, like we did have during the COVID-19 financial panic, when we had 4 big down weeks in a row. But it's very unusual to have at least or more than 2 down weeks. I can see a few here, but not. Most of these down weeks were not too serious. And if you go all the way back to the GFC, you'll notice. Let's have a bit back. There we go, GFC. Yeah, a lot of down weeks. In fact, way more down weeks than up weeks, but we still had up weeks. In fact, we had periods of time where we had quite a few up weeks, little bounces. But anyway, whole point is we should not panic when there's a down week because they happen all the time. And I've noticed, I did join some Facebook groups and I've decided not to really, what's the opposite of join? I disjoined. those Facebook groups, because they're just annoying, because so many people were asking questions. Why is this stock down today? Why is the S&P 500 down today? I thought everything went up in a straight line. I thought everything went up every single day. It doesn't happen like that. Now, when you look at the monthly chart, let's have a look at the monthly chart now. Yeah, even when you look at the monthly chart, you see there are down months, but on occasion, you have quite a few successive up months in a row. In fact, coming out of the COVID-19 financial panic, we had, was it 11 consecutive up months in a row on the XGO? So October, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, from October 2020 to August 2021, every single month was up. Now, what was interesting about that little period is that the XGO went from the bottom of the trading range to the top of the trading range. So that was a beautiful bull market period. Now, before this particular month we're in, which is April, we've just seen 5 months up in a row. So we've gone from 6,800 to 7,770 in the last 5 months, not including April, because April is not finished. Now, 5 months in a row doesn't happen all that often, but it does happen. So I've already mentioned those 11 months in a row up in 2020 and 2021. Back in 2019, we had 1, 2, 3, 4, 5, 6, 7 months up in a row. And then previous to that, you have to go all the way back to just after the GFC, where we had 1, 2, 3, 4, 5, 6, 7 months in a row. So it does seem like, particularly from 2018, that the only way you're going to get more than, say, 5 or 6 months up in a row is when you're coming out of a bear market. Now, before that, you'll notice that there was a brilliant bull market. Did I say bull bear? So if I did say that previous one wrong, but we had a beautiful, an amazing bull market from 2003 all the way through to 2007, and we didn't have many down months. A few, but not many. In fact, there were periods of time here where we had quite a few up months in a row. That was a beautiful or bull market. Sometimes say the wrong thing. So it's not surprising to say there is potential that April is going to be a down month. We are moving towards the top of the trading range. And so and this trading range has been in place since 2009. So it's been here for about 15 months. And we've only been above and or below the trading range twice, above the trading range or the top of the trading range briefly in August 2021 after those 11 months in a row, and briefly below the bottom of the trading range during the COVID-19 financial panic. So it wouldn't be surprising to see a little bit of weakness in the market over the next few months. Wouldn't be surprising to see one bad month. I thought it might be May, but if it's April, nothing to be surprised about. And on occasion, we do see a few negative months in a row, but it doesn't happen all that often. Even during the COVID-19 financial panic, it was only 2 bad months in a row, or down months in a row. But during GFC, we did see about 6 down months in a row from September 2008 through to February 2009. So that's probably the only way we're going to see more than 5 or 6 down months in a row if we do move into a recession or something like that. Anyway, that's about the XGO. Still looking pretty good, but don't be surprised to see a little bit of weakness because we are near the top of the trading range and we've had 5 really good months in a row. Probably same thing could be said for the XSO, 5 good months in a row, but less bullish when you look at the XSO monthly chart here. In fact, the XSO has not reached its 2007 highs. Still a little bit off. Those highs were about 4,200. And we're a fair bit off that, which is a little bit surprising. Let's have a look at the daily chart for the XSO. It's still struggling to get above a resistance level, which is about 3,090. So we're 3,070. And you can see during the last during the last 2 weeks, it's tried to get above this resistance level and right now is just below it. But still an uptrend, still trending upwards. And I'd like to see now the XSO get above about 3,120, preferably about 3,130 to get a new high. Again, we want a higher high, higher lows, those sort of thing. Now onto the NASDAQ. In fact, we'll start off with the monthly chart for the NASDAQ. And this looks brilliant. And this is also true. We don't have many up months in a row. We did have 4, or actually 5, and I'm going to search for the last time we had 5 months in a row, up in a row, and that was back in coming out of the COVID-19 financial panic. Before that, yeah, 5 months in a row. So that was 5 months in a row, then a couple of down months. 5 months in a row back in 2019, 4, 5, 5, about 6. In fact, I'm going to have to zoom in there. About 6, 4, 4, about 5, 5, 5. And then coming out of the GFC, we had 1, 2, 3, 4, 5, 6, 7 months up in a row. So again, it wouldn't be surprising to see a down month because you don't see many consecutive months up in a row, well, greater than, say, 6 or 7 consecutive months up in a row. So it'd be very healthy to have a down a month because you want to see 10 months up in a row because it's more likely then you're going to see a bit of a down period. And let's have a look at the weekly chart. Still looking pretty good. No reason to get concerned with the Nasdaq. You might say it's starting to show signs of rolling over, sort of like what happened in 2021. You can see there was about 2 months where the Nasdaq just went sideways. So maybe that is what's happening now. But yeah, still probably too early to really confirm that. And even the daily chart, it does look like there possibly is signs of it rolling over. And I think to get confirmation of that, if we do see the Nasdaq go below that line right there, that would be the beginnings of a bearish move. And then if we go even below that, say to that level, another continuation of the bearish move. And then if we go below there, that would be an even more bearish move. Who knows which way the markets are going to go? And if anyone says they do know, they are lying. And do we have to look at the Russell 2000? Fairly similar to the XSO, I'd assume. Dow Jones, fairly similar to the Nasdaq. It's still in a beautiful uptrend. Dow Jones, come on, Dow Jones. Big down day on Thursday, which I think all markets had down day on that day. But still an uptrend. If you have a look at the monthly chart, a beautiful chart, just like the Nasdaq, maybe even more beautiful than the Nasdaq because the Nasdaq is showing signs of sort of an exponential rise. Now, some would say you need to look at a logarithmic chart when you look in the log term, which is understandable because when you do look at a longer term chart, you do need to look at logarithmic chart because, for instance, if you go back to the Great Depression, then the Dow Jones was something like 300 points. And so for the Dow Jones to double, have to go from 300 points to 600 points. The Dow Jones now, what is it, 38,000 points. So for it to double, instead of a 300 point increase like in the 1930s, it'd have to be a 30,000 point increase in today's age. That's why a logarithmic chart is better when you're looking at the long term. I do know some people say you should be looking at logarithmic chart all the time. I don't necessarily agree with that, particularly in the shorter term. So I look at log charts for the long term, and you can just see with the Dow Jones why log chart is better if you look at the long term. So that's a log chart. You just see it's an uptrend. But if you look at, say, the non-log chart, a regular chart, you get that sort of exponential rise, sort of like we're seeing with the Nasdaq right now. So let's go back to the Nasdaq. Yeah. So we're seeing that now. Yeah. I know. So Dow Jones, Nikkei broke out about 6 or 7 days ago, and then had a down day on Friday, down about 3.4%. That's interesting, and it's right, and it closed right on the breakout level. That's interesting as well. So there's a little bit of weakness in the Japanese markets, and that's all I'm going to show you when it comes to indices. So everything's looking pretty good right now, to be honest with you. Everything's moving in the right direction, what we want to see. And just ignore all those people who think we're in a bear market. I don't think anyone thinks we're in a bear market, but a lot of people still think we are going to see a depression or a recession and us moving into a bear market. But I want confirmation on that because I have no idea about the future. I have no idea what's going to happen. I need confirmation. At this point in time, there is no confirmation around that. Everything looks pretty healthy. Okay, that's the indices. or indexes, depending on what you prefer. Now let's have a look at commodities. And we start commodities with gold. Always with gold, I suppose. And could anyone complain about gold right now? This is the daily chart for gold. No, that's the weekly chart. I lied. Well, the weekly chart looks pretty good as well. So we'll start the daily chart and then we'll have a look at the weekly chart. This is a beautiful chart. If I was owning a company with a chart like this, I'd be like ecstatic. Now, probably the only concern I would have if I was owning a company with this sort of chart was just the rapid rise in the price. It is rapidly rising. I prefer nice gradual rises. The reason I prefer that is a lot of people or a lot of investors do get a little bit nervous when price rises like this, and you will see profit taking. And that's where you might see a little bit of weakness in the share price and the price or the price of gold falling back a fair bit. But no sign of that right now. There was a nice little breathing period, consolidation period, just in here throughout most of March. That's a good sign. And I think we need that again. So gold at 2,329. So well above the breakout price, which was 2,080. So everything is looking good with gold. And if you have a look at the weekly chart, why was that 2080 the important level? That was the resistance level because gold had really a lot of trouble getting above that level for about 4 years. Yes, for about 4 years. Whenever gold got to 2080, we saw weakness, we saw selling. And it's very natural. Traders would be saying, well, gold's getting to 2080, you need to sell. And what you need though that's added supply of gold onto the market to be met by more demand, a great amount of demand. And that's what happened about, say, a month and a half ago. That's what happened early March. There was no resistance as it broke through. So gold looks pretty good. Can't complain about gold. You can complain about iron ore, though. Well, that looks pretty ugly. We haven't seen as much weakness in iron ore companies on the ASX, which did surprise me. I thought there might be a little bit more weakness, but iron ore is below $100. So it's gone from 144 to below $100 in 2024. So that 144 was almost the second day of January, the 3rd of January. Yeah, so in 2024, iron ore has been really weak. Now, another way you can do this is really interesting. I didn't realize this. If you look at the 12 months chart on something, so you can't really see it here because we don't have many years. So iron ore has dropped 30% just this year. Compare that to gold. Gold has increased 12%. Oh, I thought it would have been higher than that. 12.9%. The Nasdaq has increased 7.6% after increasing 53.8% last year. Okay, so if you look at the 12-month chart on Nasdaq, it's not the last 12 months. It's actually the calendar year, I've noticed. I didn't realize that until fairly recently. Anyway, so iron ore looks pretty weak, pretty weak. Uranium is still below 90. I thought we might have seen a little bit of a bounce. Not much of a bounce. In fact, we did see a small bounce as the uranium price moved into the long-term moving average channel. But as the uranium price moved towards the shorter-term moving average channel, we have seen a little bit weak. We haven't seen the continued movement up for uranium. So it's sort of in an area, uranium prices right now, sort of an indecision area, sort of in between the two moving average channels. So that sort of indecision, the long-term traders in uranium are bullish because it's still an uptrend. But the short-term uranium traders are thinking, now this is moving down now. This is in a downtrend. So there's a fight between those sort of traders, the longer term versus the shorter term. And that's why I have the two moving average channels, sort of signifying the long-term investors versus the shorter-term investors. Yeah. So anyway, uranium looks, yeah, I'd say neutral right now. Can't say the same thing about oil. Oil looks pretty good. So I am going to show you one oil company. I thought I was going to give you two oil companies. I can show you a few other oil companies. But oil looks pretty good right now. And there's the uptrend. I just keep that uptrend going. And yeah, it looks pretty good. No reason to get nervous about oil right now. Up is the word. Lithium, according to this, lithium's down. So let's have a look at the daily chart. No, the line chart for lithium. Still going sideways. So lithium, no reason to get excited about lithium right yet now, but it does look like lithium has possibly found a bottom. Possibly, I'll just put that out there, possibly found a bottom. Copper, very excited about copper, still excited about copper, and we saw a beautiful dip, and then copper hit the short-term moving average channel, and then has gone higher, roared higher. So that's a beautiful signal. Decreasing volume during that dip as well. That's a great sign as well. That means there's less supply coming onto the market. That's exactly what you want to see. And when copper started to increase again, we started to see increase in volume. Very healthy signal when it comes to copper. So I could imagine myself buying some more copper companies just based off this particular chart. It looks really, really good. I just don't know how long this little bull run is going to continue. The last time copper was this high was back at the start of 2023. So it's not that long ago, to be honest with you. Coal, don't really have to look at coal, I suppose. It's still going, not much happening with coal at the moment. Sort of going sideways, but it's not breaking below $120, and that's good for coal. But maybe it's found sort of a bottom. This is Newcastle coal, by the way. Okay. Is there anything else I can show you? I think that's about it. Let's go to the markets. Do you want to look at cocoa? What's happening with cocoa? Still going up. Did I mention cocoa in last week's video? Yeah. Well, there's a little bit of a dip, but still going up. Tin. Oh, have to look at the line chart again for this. Tin is looking pretty good. And palladium, not so good. Oh, nickel. Yeah, nickel. Oh, no, nickel. Oh, yeah, okay. No, it's still good. Still good. It's right on the breakout price. So nickel's looking pretty good. What's a nickel play? Nickel Industries, which is a company, which is a chart I'm going to show you today. So maybe if you are bullish on nickel, that's what you could play. And anything else. That's it. Okay, that's it for the commodities. Now let's have a look at Bitcoin. So Bitcoin is at just below 70,000. And the good thing about Bitcoin is after a really good run up, so Bitcoin went from 28,000 in October last year all the way up to 68,000, so more than doubled in about 5 months. We've just seen Bitcoin go sideways. There's not much of a trend here. And it does look like that the shorter term moving average channel is sort of a support area. It's moved into that area a couple of times and then has gone higher after that. I'd love to see Bitcoin move above 74,000. That would be a really good sign because the last high was actually lower than the previous high before that. So there was a little bit of weakness there, not enough demand to push Bitcoin prices above 74,000. So I'd love to see some more demand coming in and push Bitcoin prices above 74,000. And that would mean the uptrend is still in play for this cryptocurrency. And bonds, I noticed that the 30-year US bonds is up 1.8%. So the bonds have broken out. I'm calling it. It's not the traditional breakout. I want to see, I prefer its 6-month high, but I'll get rid of this line now. So clutter. So bond, and the reason I've got that there at 4.5%, you can see it getting to 4.5% in February and then again in March and then pulled back. Now it's gone above 4.5%. So this is telling me that the bond market is thinking, inflation might be a little bit more sticky and interest rates might not be falling and we might not get that 5,000 rate cuts that we were hoping for early in the year. And yeah, maybe that's not going to happen. This actually, if this was a company's chart, I'll be bullish, which means I'm bullish on yields going up, which, yeah, that's interesting. That's just interesting that looking at this, there's a chance that bond yields might continue to go up and possibly get backed up above 5% in like the worst case scenario. Anyway, and of course TLT, which is the bond ETF, should be in a downtrend. Yeah, bit of weakness there. Okay, so that's all I have for indices, commodities, Bitcoin, and bonds. Let's have a look at 15, or maybe it's 16, individual companies' charts. All these companies are on the ASX, and all these charts are looking interesting for different reasons. Could be breakouts. It could be the share price is at a long-term support level, which is a trade I do make on occasion. And it's been quite a successful trade. But typically, if I do make that trade, buying on a support level, I want to take profits when the share price of the company has lifted about 10 to 20% because I don't have much confidence that the rally can continue. So I'm always nervous about a dead cat bounce. So let's start with Kelsian, which is they don't build boats, they run ferries and stuff like that, and cruises, I think. Anyway, Kelsian. And why have I included Kelsian in this chart or this discussion today? So this is the daily chart going back to the start of 2023. And the thing you notice when you look at this daily chart, up and down, up and down. So you can put a line sort of up here. So when the share price of this company gets, say, above $7, we do see a bit of weakness. And when the share price gets below about $5.60, we see some buying, possible buying opportunities. Now, let's have a look at the weekly chart just to see if there's a longer term level. Yeah, maybe. And so the main reason I've included Kelsian is just where the share price is right now compared to the last few years. It's at a support level at $5 or just above $5.40. So this is a potential buy the dip opportunity, a buy, and who knows how long the dip could go, because last time share price fell to this level, share price ran from 540 back up to 720, which is it's not, that's a 33% rise in share price over a short period of time, over a 4-month period of time. It doesn't mean it's going to happen again, but I wouldn't be surprised to see a little bit of bounce. However, the reason we're seeing a lot of weakness in Kelsian is because it does look like the share price dove quite significantly on the release of their half-year results, fell 12%, and the share price has continued to fall. But possibly we might see some support at these levels. If I bought at 540, I'd probably want to get out by the time the share price gets to, say, 590 or 60. So there is a possible 10% play here, but I don't have much confidence in that. So potential short-term play with Kelsian Group, hoping the share price bounces off the support level. I think the same thing can be said for IPH, but unlike Kelsian, I probably would not consider Kelsian to be a high-quality company. I could argue that IPH might be a high-quality company, or it might be a high-quality company in the making, even though I don't like these sort of companies. And when I say companies, I wouldn't say labor-intensive companies, but they really rely on people, and they pay a lot of wages, that sort of thing. Anyway, so why have I included IPH? It's just where the share price is, based off, fairly similar to Kelsian, based off historical support level. And that support level is around $6. This is the weekly chart. $6 has been a support level for this company all the way back to the COVID-19 financial panic. That's when the share price fell, $6. Share price fell to $6 at the start of 2021, and we saw a nice rally. And the share price fell to $6 right now. This has fallen to $6 as we speak. Well, not as we speak because the market's not open. But fairly similar to Kelsian Group, I think there might have been a little bit of weakness in this company. You can see really big volume coming in towards the end of February. And I think this would have been around the release of the half-year results. So the market didn't like it. And the share price and the sell-off has continued and has pushed the share price below $6. This could be a break below this support level. We want to see the share price rally over the next few days, get above 6. This is another potential buy the dip opportunity or a dead cat bounce opportunity. And again, I'll probably only want to get at least 10%. Could we get 10%? Maybe. You could even see about 20% in the best case scenario. And that's where we do see a little bit of resistance between about 690 and 720. So a possible play here. But again, low conviction, these sort of trades, even though I've been successful, I still have low conviction, and I would take profits if I do get a 10% return if I made this trade. But keep an eye on this one because there is a potential break below $6, which is a long-term support level for this company. And the other thing to take into account is if this is a high-quality company, then if I might consider this high-quality company, if the share price gets low enough that value investors see value in this company, that could be support in itself. I'm not sure if it's there right now, P ratio of 24.5. according to TradingView. Now on to Image Resources, a company I have owned in the past. Do I own it now? No, I don't. Well-defined downtrend. And I think one of the mines, or maybe the only mine they had in production, that mine has been depleted, and they're waiting for some news about their next mine that they will start. I think it's in West Australia, and I think they got approval for that mine, if I remember correctly. And that's why we have seen a little bit of strength recently. This is starting to look interesting. So share price in a well-defined downtrend. We have seen bigger volume coming in. That's a good sign, particularly on the 14th of March. Share price on that day rose 12.9%, and that was really high volume on that day. And I think whatever happened that day, that might have been approval for their mine. Looks like that could be the low. We might have seen the low with Image Resources, and the share price at 7.8 cents is at about a 4 to 5 month high. I would prefer at least a 6 month high, but it looks like Image Resources share price is moving in the right direction, and maybe the bottom has been reached for this company. A little bit of volatility also over the past month as well, since the 14th of March. A lot of volatility. So ended up, 12% that day, went down 5% the next day, then 7.5%, and then it was, it was a big down day on this day, but it wasn't down. It just down from the open to the close. So it went from 7.9 cents to 6.8 cents, which is more than 10%. But yeah, fair bit of volatility, Image Resources, but the chart is starting to look interesting. And so I haven't had this company on my watch list for a while, but now I do. In fact, we'll probably put this in daily. According to that, I do own this company. Maybe I do, but I just don't know. Okay, Nickel Industries. You might find that strange, but I do have a few companies where I do have fairly small positions in, and some of those companies surprised me when I had a look at it last time. I did not see Image Resources in there though. Okay, Nickel Industries. I should have a look at my portfolio in share site. That will tell me if I do. Nickel Industries. So this is a nickel play, I suppose. I'm pretty sure this will be nickel because it says Nickel Industries. Exploration and development company which focuses on nickel mining. There we go. And remember, I had a look at nickel, and nickel's looking pretty good if I remember correctly. And this chart looks pretty good as well. And it does look like it's moving into an uptrend. And in fact, I'm just going to put a line right here. This was a very important breakout during the week. So right there was a resistance level. Now that was the highs we saw back in November of last year. We got to those levels again in March and then pulled back to the short-term moving average channel, and then has broken out, looks like. I'm going to almost confirm this is a breakout for Nickel Industries. So good looking chart. I'm pretty sure this company would be profitable, growing revenue. Revenue has increased from $860 million to $2.8 billion and income of $883 million. But if nickel prices keep going up, the margins in this company will more than likely improve. And if we look at the weekly chart for Nickel Industries, so could it get as high as $1.75? Possibly. So there is potential, I think, of double of a bagger for this company. Anyway, so Nickel Industries looks like it might have broken out because nickel prices are rising, and that's beneficial for this company. Okay, Orora. Wow, so Orora. So this is fairly similar to Kelsian and IPH, but not quite there. And this company did release a profit downgrade during the week. I'm trying to remember. Share price fell 14.7% on the 2nd of April, and it's continued to fall since then. Share price now at $2.20. Now, I had a look at the weekly chart for this company, and $2.10 was the lows back during the COVID-19. Well, actually wasn't the COVID-19 financial panic, because the lows were actually reached in August of that year. Anyway, so that's the long-term lows. So if you go back even further than that, so if you just extend the line all the way through, the last time the share price was at $2.10, apart from just after the COVID-19 financial panic, was way back in 2014, just after they listed on the ASX. So possible value for this company. Share price high for Orora is above $4.30. So only 50% lower from where it is now. 50% higher from where it is now, not lower. But just the weakness in the past week, share price down probably about 25%, 18.8%. Big volume coming in as well. This is the highest volume or weekly volume this company has seen since it listed. So that would be concerned that fund managers are getting out no matter what. That's why we're seeing weakness in the share price, high volume, but I wouldn't be surprised to see the share price bounce off $2.10, which is not much lower from where it is now. So possible bounce play here as well. So I'm going to put that on my buy. Okay, from pretty ugly looking chart to one of the best charts on the ASX. I'm not going to call it the best chart on the ASX, but one of the best charts on the ASX is Gentrack. I do have this company in my small cap portfolio and I want to sell, but I have no reason to sell. So if I have no reason to sell, why sell? Share price in a beautiful uptrend. This is the definition of a beautiful uptrend. Company has released a few really positive announcements. Share price, when it broke out, was just above $2. So it's gone from $2 at the breakout, and that was in late November 2022. So we're talking about 18 months ago. Share price has gone from $2 to $7.60. And it's a beautiful looking chart. No reason. It's remained above the long-term moving average channel. And really, whenever the share price gets into the short-term moving average channel or just below it, that's the time to buy some more shares because it's not done that often. It's done that rarely. If you have a look at the weekly chart, you can get a longer-term picture of Gentrack. And that's the other really interesting thing about this country is the share price has broken above its highs, all-time highs, which were reached in May of 2018. In fact, it's gone well above that level. And I would not have been expecting that for a long time when I first bought shares in this company back in late 2020 at about $1.50, something like that. So this is definitely a turnaround story. And unfortunately, you're probably too late in this trade if you're waiting for a turnaround for this company, because it's definitely turned around just based off the chart. But this is just a definition of a great looking chart, a company you want to own in your portfolio. And in fact, a company that you want to sell, but can't sell at the chart because the chart looks absolutely beautiful. I got another chart that's really, really good is Iperionx. I don't know anything about this company. I don't know why, because the chart looks pretty good. It's not as clean or as beautiful as Gentrack. Gentrack is just lower volatility. It's just going up. It's going up. You can see sort of a rapid rise in share price, and the share price goes sideways. Rapid rise, share price goes sideways. So back in late November, early December, share price rose in 5 trading days from about 450 up to about 625. And then over the next 2 months, share price just went sideways. We've seen that happen quite a few times with Gentrack. That does not happen with Iperionx. A lot more volatility. Share price gets too high and then falls back, gets too high, falls back, gets too high, falls back. Although the share price is going sideways now, but still a lot of volatility in there. And it does look like you can't really have any trends, because if you did put a trend in here, say from these there, there is almost a trend there, but the share price rose rapidly in January, February, that the share price right now is well above that long-term trend. So that long-term trend has a share price of $1.40. Now the share price is $2.18. So what does Iperionx do? This company has a market cap of $500 million. No revenue, which means they're loss-making, no profits. No revenue. So let's have a look. So according to TradingView, this company engages in the development of low-carbon titanium, sounds interesting, for advanced industries, including space, aerospace, electric vehicles, and 3D printing. It produces titanium metal powders from titanium scrap at its operational pilot facility in Utah and intends to scale production at a titanium development or demonstration facility in Virginia. Okay, so maybe, to be honest with you, that does sound intriguing. So maybe the market is excited about this company because of the potential. But this is another case where, in my opinion, the company has to prove its potential. There is a lot of potential out there when it comes to companies, but the majority of companies that have potential never prove it. Would I be buying this company? No, because there's no revenue. It still has to prove its potential. And the market will be getting well ahead of itself. Let's have a look at the weekly chart for Iperionx. So the weekly chart looks good. So you can see there was a period of hype around this company back in late 2020. Share price went from 8.7 cents to $1.40, and then the share price fell from $1.40 all the way back down to below 70 cents. So share price halved during that period, and then share price took off again not long after, maybe a year after. So there has been periods of time where there's been a lot of interest in this company, a lot of hype, and then a bit of a dull period. And now I think we're just possibly at the end of another hype period. Hype period in Iperionx. Okay, Weebit Nano has been sort of a market darling at some point in time, particularly a retail investor market darling, maybe not an institution market darling, because I don't think many institutions would be interested in Weebit Nano. Markup of $600 million and still very little revenue. According to the annual statement, no revenue. Semi-annual statement, they had $153,000 of revenue in the last half year. I probably should go back to Iperionx just see if they had any revenue in the last half year. Come on, where is it? No. Nope, no. So let's go back to Weebit Nano. And why? Oh, yeah, okay. So the share price of Weebit Nano has been sort of in this sideways moving channel since about September of last year. So it's not a long sideways channel, but it looks like it's moving towards the bottom of the channel. So the bottom of the channel is around about $2.80, and current share price of Weebit Nano is $3.20. Doesn't mean there's going to be any support. Doesn't mean the share price will bounce off. If it does hit the bottom of the channel, it could fall straight through. It does look like maybe there's a little bit of an increase in negative sentiment around this company, because the positive sentiment in this company sort of died away between, we'll say, February of 2023 through to August. So there was a 6-month period where there was sort of a fight between the positive and the negative sentiment, if there ever could be a fight between negative and positive sentiment. And you can see that, which is with the volatility in the share price. Share price up and down quite violently. And that is just positive and negative sentiment fighting each other. And then finally, negative sentiment won, or the bears won. And the share price moved into a short-term downtrend from $6.50 all the way down to $2.80. And then we had a bounce, and we haven't seen that level broken. So that was almost 6 months ago. Actually, it was 6 months ago where we saw the lows in Weebit Nano. So the only reason I actually am paying a little bit of attention to this company is a potential bounce off $2.80. So I will put this company onto my daily watch list. Hazer Group, another company I don't know anything about, but I have heard this company mentioned quite a few times on AusBusiness Call, even though the company has no revenue. So what does this company do? Engages in the research and development of novel graphite. I was going to say novel books and stuff like that, but no, novel graphite. No idea what novel graphite is. Big graphite. And hydrogen production technology. Uses the Hazer process, which converts natural gas and similar feedstocks into hydrogen and graphite using iron ore as a process catalyst. So again, it sounds really interesting, but no revenue. No revenue at all. Another story stock. But just like Weebit Nano, just like Orora, just like IBH and Kelsian, it's where the share price is right now compared to historical levels. So there is definitely a support level for this company at about, we'll say at about 45 cents. Got down to 45 cents back in June 2022, March 2023, September 2023, and is right at that level right now. So you can see it bounce really nicely. All 3 times it has hit this price. Now, here's the thing. Each bounce has been lower strength than the previous one. So the first bounce went from 45 cents to about 90 cents. So we had a 100% increase in share price. Then in the March 2023 bounce, it went from 45 cents to about 80 cents. So it's still a nice little bounce. And then the September bounce, it went from 45 cents to 70 cents. Now, there still could be a nice little bounce. In fact, we draw a sort of a trend line there. Yeah, you can actually almost do it perfectly. So if we saw a bounce now, what could we see? Maybe up to about 60, 62 cents, which would be a nice little bounce. That's more than 10%. So I could actually play this as a nice little bounce. Yeah, the chart looks pretty good in terms of maybe the bounce. Anyway, so that's Hazer. Other than that, it's another story stock. We don't know if it's going to be if this company will be successful with what they're doing. We just don't know. I would prefer to see some numbers, but this would not be a long-term investment. This will be just, playing the charts, trading the charts. This will be just trading the charts. Okay, to a company has been long on the ASX, Light and Wonder. This chart looks beautiful. But this company is American listed, I believe. That's why you can see it's not a smooth looking chart. Not quite. Thought there could be a pretty good uptrend there. I did actually take notice of this little dip in the share price back in January, and I thought maybe there was an opportunity, and the share price absolutely taken off. But we have seen another little dip. Share price has decreased from 168 to 152 and has moved into the short-term moving average channel. So maybe this could be a little bit of a buy the dip situation with Light and Wonder. I'd love to see it to say $140 or so. That would be a nice little support level, or even towards $132, which is the 150-day moving average. That was the support level for this company back in January. So still a long way to fall before the share price gets there. And more than likely, this is just following what's happening in the NASDAQ, that sort of thing. So Light and Wonder, market cap of $13.5 billion. I'd say most Australians don't know this company exists. It has a market cap of $13.5 billion. And when you look at the annual revenue, $4.4 billion of revenue, company is profitable, $245 million of profit. Look at the quality data. Profit has been increasing over the last 4 quarters, and revenue's been slowly increasing as well. P ratio 58, probably a little bit too stretched for my liking. AMI, is this Aurelia? Pretty sure it's Aurelia. Yeah, it's Aurelia. Okay, so a couple of gold companies. I can't not show you gold companies because gold is on a tear. And I thought I'd show you 2 gold companies I haven't looked at much in the past. And maybe I should have, because Aurelia Metals looks really good right now. Now, I'm pretty sure this company is in production. I could be completely mistaken. But looking at the annual revenue, well, that was semi-annual revenue, looks bad. Annual revenue has sort of topped out and now is in the downtrend. And the company, according to this, is not profitable. And maybe that's why the share price was in a well-defined downtrend for a long time, moved from about 50 cents all the way down to 8 cents at the low. But share price is moving higher, is trending up. This is actually looking like this is a really good chart. A nice increase on Friday, almost a 10% increase on Friday. Beautiful chart. You can see there was a period of time in March where the share price just went sideways between 14 and 14.5 cents. It was over a 23-week period. That would have been really healthy. If you saw that, that's a healthy signal. And the share price take off after that. So a really nice looking chart for Aurelia Metals. Otherwise, I know nothing about this company. So maybe I should do a little bit of research. Do I have this on my watch list? No. I have this on my breakout watch list though. And Silver Lake Resources. So not all gold charts look good. Some gold charts look pretty ugly, which is concerning for those gold companies, because with what gold's doing, all gold companies should be looking really good. So I thought I'd just bring you, instead of showing you one of the other companies I really like, the charts I like Western African, Perseus, either North Star looks good, Ramilius, Resolute, what's another one? Bellevue Gold looks pretty good. This is Silver Lake Resources. I don't follow that closely, but it does look interesting right now. I'm just going to draw a line right here for the uptrend. I'd like that to be confirmed. I'd like the share price to get and touch this uptrend line. That's for greater strength. But the other reason why I think I decided to include Silver Lake in this video is that the share price possibly has broken out. You could put it there, you could put it there. There's one day where the share price rallied for some reason on the 2nd of February, but then it fell straight back down. So it wouldn't be many people who invest in that one day. And yeah, the share price looks like it's rallying. And during last week, the share price got to $1.30. And the last time the share price was $1.30 was way back in April of last year. So 1 year high for Silver Lake Resources. WH Pattinson. So this is, I would say this is a quality company. This would be a favoured investment among many Australian investors. I would assume probably trails CBA and BHP by a long way. Probably the other three major banks as well. Telstra probably trails that by a long way as well. But I would say most savvy investors know about what Washington H. Soul Patterson and knows this is a quality long-term investment, right? If you look at the weekly chart, you'd see going from the bottom left to the top right. In fact, if you look at the monthly chart, let's do that. Monthly chart, definitely seeing that. So there's been on occasion a bad year. 1997 was a bad year. But typically, over time, share price of what WHSP Patterson goes up. In fact, back in 1990, share price of this company was below $1. Now it's $34. And I'm pretty sure this company has increased its dividend for like 30 years. Anyway, so why am I showing you WHSP Patterson? Share price has been a little bit weak over the past month, 2 months. It's fallen from about $36 down to 34, which is not much, but has fallen into a support level, which is the longer-term moving average channel. Interesting thing is, so look at those highs. Actually, let's go back to the weekly chart. Yeah, not quite as high as we saw back in 2021, but we did see the share price back in September last year get to $36 and then fall away. And that's what we've seen again. So this, you go back to daily chart, this is a possible double top. Possible double top because it did find it hard to get above that old highs we saw back in September. So possible double top, but also possible buy the dip situation with WHSP Patterson. I would prefer to buy this company, say at $22. The level got back in June 2022, but I should have bought then. I was following the company then. I was like, oh, I should buy right now. And I didn't. Didn't hit the buy trigger. Treasury Wine Estates looks interesting. This one actually does look interesting. I have traded this company in the past, and we did see a little bit of a dip. And this is a sort of a confluence of a support level meeting a moving average channel. And the share price of Treasury Wines hit that on the 27th of March at $12.20. The support level was $12.20, and the moving average channel was around about $12.20. And then the share price just took off. Look at it go. So this is definitely in an uptrend. I'd say just a short-term uptrend right now, but things are turning around for Treasury Wine. Things are moving in the right direction for the company. China has repealed, is that the right word? Got rid of their wine tariffs on Australian wine. Their tariffs on Australia. I shouldn't have said wine tariffs on Australian wine. I should have just said tariffs on Australian wine. And the share price is now at a 1-year high. Oh, not quite. Last time share price was this high was back in May, early May of 2023. So almost a 1-year high for Treasury Wines. And finally, Karoon. I've traded this company as well, and this looks pretty good. In fact, this looks way better than some of the other oil companies. I can tell you that much. And let's have a look at those. So I was listening to Ausbiz the Core this morning from about a month ago, and whoever was on was very bullish Wooside. Don't know why. This is really unbullish. In fact, why is Wooside not doing anything with the share price when oil's on a tear? I don't understand that. Just going to have to adjust to fit screen. There we go. Why? And it's just bounced off a support level. So again, look at that. Long-term support level for this company was about $29, and it bounced off it on the 13th of March. It's gone from $29 or just below $29 to $30.60, which is not much of an increase, but still it's bounced off it. So again, technical analysis does work. So this chart looks pretty average. And then Santos, and the person on the Ausbiz call was sort of dogging on Santos, but Santos would have done much better in the last month. Look at that. It's riding the increase in oil prices. And he's at an interesting level. Look at that. Santos has a resistance level at $8. Oh, and it goes back a long way. In fact, I'll just put it up. Just look at that. Don't do that. I don't know what I was doing there. Oh, look at that. And actually, look at the weekly chart. Get it sort of, you can see it better on the weekly chart. Maybe not. I don't know. So definitely, Santos has been trading in a channel since, when was that? Since June 2022. So for about 2 years, Santos has been trading in a channel between $6.80 and about $8, we'll say. About $8, and share price right now is $7.93. So it's very close to breaking out Santos. And if you just look at the daily chart, it looks way better than Wooside. But a month ago, the share price of Santos was significantly lower, $7. So it's gone up about 12 or 13% in the past month. And what else? Oh, another oil company or energy company that looks pretty good is Beach Energy. Beach Energy looks pretty good. Pretty good. It's broken out. I'm calling it breakout. Although, if you just put it there, yeah, that could be a better line or breakout line to put it. And again, I don't believe in prices as resistance things. I believe zones are better resistance. So zones. So when I say resistance, I'm not talking about a price. I'm talking about a zone. So between about $1.84 and $1.92 is a really good resistance zone for Beach Energy. And share price of Beach Energy is $1.90. So potential breakout for Beach Energy. And this is trading in the way of oil. This is exactly what you want to see, not Woodside. Woodside is doing completely the opposite to what oil's doing at the moment. Anyway, that's all I've got for today's video. If you have any suggestions, any recommendations, leave in the comment section of this video, and I'll talk about that company in Saturday's answer and replies video. That's all I've got for today's video. Have a good day. Bye. And don't forget, I'm not a financial advisor. If you do need any financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.